David Bowden, Sky News.
Well, yes, so far. Joining me in the gherkin is Tomas Freyman, who's Director of Valuations at the Accountants BDO. Do you think they're going to stay at 46 for the rest of the day?
If I could answer that question, I'd be a very rich person.
But I mean, are you encouraged by this? Is this an accurate price, or would you say this is a false hope?
It's good that you've used the word price, because I think that what we're talking about here is pricing the shares and the company. Whether that's the true valuation of the company is a different story, and that will be determined over the next few weeks, months, as more earnings are reported and a more stable, narrower trading range is determined for the company.
Yeah, what about the P word? Because profit has yet to be seen. Twitter hasn't done that thing yet, has it?
No, it hasn't. There have been other tech IPOs with businesses that haven't made profits, so it's not the first time we're seeing one of these. But one needs to question whether the valuation we're seeing on it is appropriate for a company of this size.
Well, what do you think?
Well, I think we're in frothy territory, definitely.
You're a skeptic, aren't you? You think it's overpriced?
Companies go public for two major reasons. One is for current shareholders to take some money off the table, and the second reason is for a company to fund its growth. I think in this company we're seeing growth expectations that are tremendous. If we translate some of those growth expectations and translate them to Apple, Apple would be trading at roughly the GDP of Germany today. That's the multiple that we're seeing on Twitter.
So from that, I take it you are cautious. Do you predict then that this price will fall dramatically from what it is today, perhaps not by the end of trading today, but in the short term? It's going to do a Facebook and plummet back down to the $20 mark that they talked about just a few days ago.
Again, if I could predict that, I probably wouldn't be sitting here today.
So, but your instincts suggest, I mean, one of the things that they've made the comparisons, and there's an awful lot of analysis has gone into this, is closer to a Google than some other. I mean, the Facebook IPO was another thing on it in its own story, and we know all the sort of multiple problems they had with that. And LinkedIn, perhaps likewise, you know. But Google, a bit like Twitter now, the two of them have got this pay-per-click, targeted advertising, which I know is unproven, but has the potential, say the enthusiasts, to actually make a lot of money.
It does have a potential, and that's essentially what investors are buying into, is that potential. And largely the potential of management to execute on that and to ensure they promote innovation in the business and to, more importantly, determine the business model for the future. This is a company whose business model has changed. A year ago, we were talking about monetizing mobile. Today, I think we're speaking more about what it can do for television and how it can be the user's second television in the home.
Okay. Should we just have a look at the share price screen? Because it just reminds people, if they weren't tracking it all day, it had a spike up to, what, nearly $50, didn't it? That was just in the first half hour.
Yes.
Who would have been pushing that up? I mean, is that some of the lucky investors who literally get in there, they've got some stock, and in the first half hour they see it go up and sell straight away?
It's difficult to know who's trading. I think we'll know more about who those underlying investors, I think more importantly traders, are in the next coming days. I think over time we'll start seeing more institutional investors moving in, who will then form that narrower trading range over the next few weeks and months.
Okay, you're being very cautious and won't predict, I know, but I'm going to the territory of trying to make you predict again. But the fact we've been around, look, after that $50 spike, it's been around the 46, 45 most of the day. A few hours still left, so something could happen. But does that give you cause for encouragement that it's found a level? People are not bailing out, they're not taking profits?
Well, we don't know. What would be interesting to lay over that are the volumes and who the underlying traders are. We don't know enough about the business or the trading cycle today to be able to comment more on that.
What do you need to know then to see where the volumes have gone?
Well, it would be interesting to see who the underlying investors are, who's buying and selling.
Well, it might be other tech investors, because I see one statistic, again, with the trading day not over, but the Nasdaq's seen tech stocks slide today, as if people are taking cash out of there and having a go at this one. Is it really that simple?
Well, I don't think it's that simple. I think there are a lot of unanswered questions
Well, why
here.
would the other tech stocks fall then?
Well, there are other drivers for that.
Like what?
Well, I think we want to speak about Twitter here today. There are other drivers which I can't comment on that impact tech movements on a daily basis. With regards to Twitter, I think there's still several unanswered questions that will need to be ironed out over the next quarters.
What's number one of your list then? What do you want to see ironed out?
Well, I think the company needs to determine what their business model is going forward and how the monetization of ad revenue is being generated and how that's being translated into profitability and obviously cash flow. At the end of the day, any investor investing in a company needs to know that it's generating a decent return.
But the algorithms they use to get the cost per click going on advertising, a bit like the Google thing with their AdSense and so on, they're not going to tell the market exactly how they do that, because otherwise their competitors will know exactly what to do as well.
Correct, but the market needs to start seeing that it's being translated into cash flow and profitability, and that will come through their reporting requirements for the first time. This is a business that hasn't reported its financials. It's been a business that very few people know anything about, and now for the first time, quarterly, they will need to report these things, and investors will start being able to make their own decisions.
And that shining a light onto the inner workings of the numbers and how they crunch and what investments they're making will be revelatory?
I think it will be.
In what sense?
Well, we'll for the first time start seeing where the revenue is being generated and how much.
The fact that the investments or the amount of revenue that's coming in from abroad versus the amount of domestic, as in American revenue, is that a factor that plays on this too?
I think that's a very good, very, very important factor, Martin. When some of its peers, Google, LinkedIn, Facebook, went public, certainly a larger proportion of their revenue was coming from the international markets, i.e. outside of the US. This is still a business that's largely US based, although we've been seeing very interesting growth in the UK market for one. I think as the international markets grow as a percentage of their revenue, that will be a very good story for the investors.
We shall have to wait and see, as you keep telling me. Okay, Tomas Freyman, thank you very much indeed.
Thank you for having me.
No change